Good morning, video morning brief of the U.S. stock market, Monday, March 17, 8:34 a.m. Eastern Time, and Rich Posh for Critical Point. All right, quick snapshot. The market's likely going up over the next few days on level 4 swings as more up than down, and on a level 3 uptrend. Although the level 3 uptrend can stay up into early next week, it's probably topping this week. I see the market lower from this week into next week, and that's based on the model. Okay, but in my opinion, I think it makes sense. I think it's going to work here. Now, a few minutes ago, we got news of retail sales up 0.2%. That might have been better than some expected. The stock market had been down 30 points overnight. It's now down about 16 points for the S&P 500. We'll have to see how they deal with that retail sales information, but I think that was a positive thing to help the idea of a level 3 uptrend this week. All right, this is the hourly chart. I don't have anything to show you from Friday. If it trades below 5609.68 today, I think it's trying to pull into a last minute level 4 bottom if it does it early today. I think ultimately this market wants to be higher tomorrow and the next day for level 4. So I think the downside is rather limited here, time-wise, amount of price change. I think there's probably more upside is how I would day trade it, intra-week trade it, but I really don't have any clear good indication on level 4s. But we'll take a look at the 6-hour future chart in a moment. Maybe you can see something a little better. Anyway, if I were to trade below that price level, I'd be a little concerned it can dip lower, and there's still this trader's gap right there. Okay, so it can trade back to 55, 54. So as a near-term nearby downside target. Other than that, I don't see much information out of this hourly chart to help me. So we'll go to the futures and 6-hour chart and look at some bigger moves. What we have is last week, the lowest price of the week, the weekly low, was likely a level 3 bottom. And that is debatable, but I no longer care. It's difficult to calculate it right now just because there's this intense downtrend that is getting difficult to differentiate. Is that bottom, that type of bottom, or is it something more important? Okay. But I can see the upside seems to be a little more clear. I think we're heading into a level 3 up move, so I'm just simplifying saying we're in a level 3 uptrend, even though there's some things saying, maybe we are, maybe we're not. And what that relates to is the flakiness and fuzziness here that Trump and right-wingers in Washington, D.C. can update us almost any hour with anything going on, a lot more drama than we normally get. That could change some of this stuff. And the market knows that and is trying to dial in multiple tactic strategies along the way. It's looking at multiple things just as our model, and the model is actually looking at what those people are thinking and doing as well. So it's picking up on that anyways, even if it couldn't pick up on it from price or the news itself. At any rate, I believe that it's possible we got a level 4 bottom in overnight for futures, but that doesn't make sense for cash. So I think they might ease this back a bit this morning, but I think sometime today it bottoms for level 4 and moves higher into Tuesday, Wednesday for next level 4, meaning I think the level 4 top was late last week, was Friday, okay? There's some weird things that it might take a little longer than this to make this work out for me, all right? Now, I think what this market wants to do is trade higher towards the 5,700 mark. Now, I have potential upside targets to 58, so keep that all in mind, but I think it's going to trade near 5,700, put a level 4 top in, and I think that even though that's the earliest allowed for a level 3 top, okay, I think it can just go down. Now, it may go near 5,700, pull back, and then go further and deeper into the 5,700 areas with other level 4 tops that are going to have more of a bullish bias than a bearish bias because they're extending the level 3 uptrend, okay? And so it may take a while. This market may be trending higher into early next week. I think it's trending higher into a top this week. I don't think that top should show up until tomorrow, the earliest. So Tuesday to Friday, I think this market tops out for level 3 and goes lower. And I think what it's doing is trying to give us a blip up, a little bit of a relief towards 5,700. Then it's coming down towards 5,500 if I'm on down to 5,347 or 5,400, stuff like that. So keep that in mind. I think it's going to a new low because of the larger trends, a new low for the year. But it doesn't have to. We may be base building and just floundering around for a little while into those more important bottoms due. And this is the first week for one of those more important bottoms, but I don't like it. The model doesn't like it. We're both holding out for that more important bottom a little later this month on into early next month that could take it lower still. So based on a very short-term basis, I want to sell this level 3 just to see what I get, even though I may not get much out of it, and I may not sell it all that much. It may be the market's tired of going down, but the problem is we have 1987 scenarios, we have COVID scenarios, okay, when we can get more downside and drama here. We have statistics suggesting when the market's been down 14 days, like it has been, that only 5% of the time did it immediately bottom right then, that there was more downside later. It took longer. So do keep that all in mind. So at any rate, I wouldn't be too concerned if they want to sell it this morning unless the drama comes back, the news to scare them. Then we might be missing something and we might be dragging our feet and taking too long. But I think before it goes into that level 3 bottom, which should be way out here somewheres now, all right, I think there's more upside coming. So it's okay if they knock it down a little today as long as they don't get too carried away. It ought to be higher by Tuesday, Wednesday, something like that is how I see this really short-term stuff. And keep in mind, the level 4s are just pops and drops during the day. Sometimes the most important swing in one direction during a day. Otherwise, the most important pops and drops during a week, I should say. Then they build into the level 3, which is your more important uptrend, downtrend during a month for a month. It's monthly business. Then the larger trends are quarterly and semi-annual business, but sometimes in just one direction, they can be as brief as just a month. They act more like a level 3, although maybe a little more volatile. All right, next up, let's see here. Let me take a quick look at the interest rates. I forget what the model output was. Really, interest rates ought to work higher this week into a level 3 top and maybe next week. I think the stock market can rally even though interest rates are going up. I think it's kind of, it's just flipping and it's how it's doing things. Now, if interest rates soared, I think they sell the stock market. It's going to be a problem for us. Right at the moment, if they behave themselves and move up somewhat, I don't think the higher interest rate is going to knock the stock market down. It may limit the upside, but it's not going to knock it down. All right, let's go over to the S&P 500 cash. I really like Friday's reversal. I really think that's a bottom. It didn't go as low as I want, but it was hitting all targets below and it hit the moving averages. So it's all worked very well. I think they want to pump it back to the 200-day moving average around 5740, but they may stop below 5700. They may go above it up to 5800, but I think it's kind of like a magnet here to put it up there before putting back it down again for the level 3, okay? So today can actually be a down day. I could even be wrong, it's down, and tomorrow, then it's up later in the week. But I think they're going to have a better move here so long as Trump news and the MAGA people and Washington, D.C. leave us alone, okay? And that's just stuff that can happen any minute, during the day, during the night, all during the week, and it's going to be happening for weeks to months to come here. We're just going to have to learn to deal with it. But I think this is going to be a little bit of a relief rally that will bring it back down, and maybe it won't go any lower, but I think it should, is the best I can tell you right now. Everything is so oversold for so long, it deserves to pick its head up a bit. But I got a feeling, I'm going to agree with Linda Raschke said, at 14 days down, there's only a 5% chance of bottoming immediately, okay? I think there's something to that. There's more weakness coming. Now, let's zoom out to the weekly chart, go to the S&P 500 cash, and it looks ugly, 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 and it can be ugly all the way into the first half of April, can be ugly for the rest of this month, but the model is warning starting this week, it can bottom. And even last week, it could have bottomed for at least a level 2. The model now prefers up this week, down next week, so it's actually next week is the best or the preferred time for the earliest for bottom. It may even blip up and down yet again and not bottom to the week of April 14th, which is later than what I've been showing all so far this year. Okay, so a little bit of revision there. It met our downside target. It's met all the targets all the way down, but it can go all the way down to 54.65. I'm also using 53.47. Okay. And I can't even rule out the 5100. I can't rule out 4100. All right, it could be that bad and ugly, but the more downside, the longer it should take. So we may be down into May, June, July, but we may also see it can bounce in April, however, before going lower still. Well, if it's going to bounce in April, we got to find this level 2 bottom. Now, if they were beat this up even more in the next couple of weeks, this level 2 bottom may be a level 1. I'll discuss that more in weekly update. It may turn out to be something more important, far more important than I realize. But the best forecast is level 2 bottom, bounce it in April for level 2 top, put it down for the more important level 1 bottom, meaning lower still likely, in May, June, July. Then we'll start talking about a minor long-term bottom. But there are some things that could be a more important bottom now in the next few weeks, but we'll talk about that over time. Right today, stay focused. Let's focus on just a level 2 bottom. Where is it? When is it? Well, we got some time frame. We've got price targets, and the weekly indicators finally getting down near oversold. And I'm surprised it isn't really that more dramatic here, really. And we probably you don't want it to be more dramatic if you're a bull. You want it to be stopping now. And so as we look out the next few weeks, an up week is probably going to be a bullish sign of a level 2 bottom. But I'm not too sure I want to do that this week. It may be, but I think I'd rather ignore the upside this week. And for the very short-term traders, I might want to sell it. If you're even longer-term and scared it's the end of the world, it's just going to keep going lower, you want to continue to sell bounces until you get information enough that you want to buy bounces that is trying to get back in. So I think there's more downside coming. I don't think the breadth looks good. The equal-weighted index does not look good. The NASDAQ, Dow Jones don't look good. This is still a downtrend, and the 5-week average is way behind. This is going to explode all the way up to 5,900. Here's my theory. I think it's going down into next week, but should bounce some this week first. Then I think it might go to 5,700 or so, then down and lower still perhaps, and probably. Then I think it might bounce and move all the way back up to 5,900 in April, which means must be we're going to get some relief from Trump and the right-wingers and MAGAs, a relief around the world that even investors might become even braver, that the bearish news isn't bearish enough anymore, and we might get a nice bounce by April. What tells us that we might even get some good news, all right? At least some relief there. And then it's probably going to be a bad storm again by May, June, July is my best stance. Okay, and I don't have anything else to say on the bond market here. I can't even seem to find a chart. There it is. And to me, it ought to be working higher into a level 2 top in just the next few weeks. And that concerns me. If it can't rally very much at all, it's probably going lower and lower still in May, June, July. And that should worry us. That's actually a sign of a deteriorating, weaker economy. And I think we're on our way towards a secondary recession. I'm not saying we'll actually hit it. And I do not believe we'll have a true recession this year. I think that's coming down the road and maybe long ways down the road. But there's risk of it. There's rising risk of it. And we can get a secondary recession, meaning it looks and feels like a recession, but it doesn't meet the definition of the officials and doesn't go into the history book. All right, Mag 7 really weak here and can bottom as of last week. Again, I prefer a little later here. I think it's just in line with whatever else I've been talking about here. And then this is NVIDIA, and that one's looking a little better, and it can see better support now in the next few years, even if the stock market did not do very well at all. I think we're leaving the 1920s, 1990s analog, meaning this really ought to be maybe July, August 1996. It ought to be January, February, March of 1926. And then the market goes up for a few years and no real disaster for a while. But I think the AI is taking a back seat. I think we're moving away from the 1920s, 1990s. They may be even over and done with. A totally different picture later this decade. Not so good. All of these other mixed things coming in. But at least temporarily, I think we're off track here. And I'm more concerned of being like a 1987 analog when over a 3 month span, the market dropped like 36%. Okay. So that would suggest we've seen month one as February into March, really, and then March into April would be a rebound. And we've already been down a little more than in 1987. And in 1987, it rebounded about 6%. We may rebound a little less than that, maybe the same, maybe a little more, I don't know. But then by the third month, which would get us out into May, the market just collapsed and fell by a huge amount and polish it off so that you would, when you would put it for this year, meaning it was different months back then. I think it was, what was it, August, September, October. But this year we're looking at February, March, April, May, that kind of time frame for a 1987 analog. Now, we can also have a 2020s analog for COVID right now, a crashing moment, and that could be just as bad as 1987, okay? Whereas the 1920s, 1990s analogs, we might be in 1999, and we might be in 1929 right now, and the market crashes 60%. But it won't crash 90% like the 1920s. It shouldn't be that extreme yet. So those are the things that can go wrong under Trump here. Some extra things to make it even extra bearish this year. But right at the moment, I'm assuming probably the worst downside is 30% instead of 60. And even then, there's a good chance we don't see it more than 20% down. We've already are down been 10%, so we're well in my target I've used for 12 months now for this year. So it can put the brakes on now and to the rest of this year and put a floor price in, but I'm suspicious there's more coming later, okay? I think we just have to assume there's more downside coming, but right now we could get a little blip up. Now the dollar index is trying to find its feet. It is due for a bottom. I think it can recover in the summer, but I'm nervous it can also go lower. I don't know. I don't have a good feeling for it. And right the moment, the model doesn't. And the model's saying downplay it. It's not as important as interest rates, and interest rates are not as important as the recession, the potential or the risk for a recession, and all this Trump activities and the MAGAs and this and things that are going on. Gold's doing quite well because people are just scared of the future here. All right. And I'm trying to think of what John Arthur's mentioned this morning. I guess I'm going to have to skip it. He had a couple of good points this morning here to watch on news. Do keep in mind the retail sales look pretty good for us, but that's a fast, volatile thing, difficult thing to forecast, and maybe meaningless to the market over time. But I'm thinking it might help with this blip up this morning, okay, or blip up, I should say, this week. And here's the futures are already waking up on us here. I'm really convinced that's a level 4 top, but it may occur now. I'm convinced that's a level 4 bottom for futures, but we need a little setback this morning and get the cash market caught up for level 4 bottom. My best forecast, this market's going higher into Tuesday, Wednesday for level 4. It's going higher from last week into Tuesday, Wednesday, and maybe on into early next week for level 3, but it ought to top this week. And then it's going lower from this week into next week is my best near-term morning brief forecast. Past results are not necessarily indicative of future results. Have a great day. Thank you.